The Federal Reserve met today, and boy, it was a fun one because Jerome Powell was basically signaling that everything was going well. The economy was trending in the right direction, inflation data was trending in the right direction as well, and everyone was kind of expecting that he would say that there would be a rate cut in March. However, a reporter then asked him the following question. Let's listen.
Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
Okay, so that's a really interesting question. If we see one rate cut, are we going to see a bunch more after that, or is it just a one singular solitary event? And here's how he answered that.
Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen.
Okay, so how do you think the market reacted to that? Because everyone was expecting a rate cut in March, and we can actually see right here, it was not good. I mean, this was right as he was speaking and everything was going well, and boom, just like a roller coaster downward. That was the S&P 500. The NASDAQ ended down 2.23%, same kind of behavior right there. Just absolutely insane. So that's not really good news for today. And traders are now pricing in a 62% chance that the interest rates remain at 5.25 to 5.5% in March, versus before the meeting happened, this was basically flipped. It was 60% that people thought there was going to be a quarter point cut in March, and now it has flipped the other way. So we are largely expecting that rates will stay elevated through March, at least through the March meeting. Now, a reporter did ask Jerome Powell, hey, what would it take for you to cut rates sooner? Because if things are all going well, what would it actually take? Let's listen to what he has to say.
That's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well, the labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things, would argue for moving later.
The main thesis that Jerome Powell is trying to share with us today is that the economy and the inflation data has been trending in the right direction. So if it ain't broke, don't fix it. Obviously, he says in that clip that if he does see a weakening in the job market, or he sees inflation trending in the wrong direction, that he might actually start to step in and do something with the interest rates. There's an interesting quote by the Co-America chief economist, Bill Adams. He actually said that, quote, "The Fed was badly burned in late 2021 and 2022 when they thought high inflation would be transitory. They got caught by surprise when it was higher and more persistent than expected. They want to avoid making the same mistake twice." Essentially, Jerome Powell really wants to be sure that the inflation data is trending towards 2% before he makes any moves. Still, though, let's take a look at the economy. The economy is doing really quite well. Look at the GDP change from previous quarter. In the fourth quarter of 2023, it was up 3.3% right here. It's actually been positive for the past 1, 2, 3, 4, 5, 6 quarters. Of course, we had that technical recession in 2022, but there is no really big threat of recession here. And the forecast is in gray right here. We're actually forecasting that GDP is still going to grow for the rest of this year. In terms of inflation, let's actually take a look at that. The U.S. Consumer Price Index was up about 3.4% in 2023 for all items right here. And if we actually look at this chart of the United States annual inflation rate from 2013 to 2023, we can see that it's doing quite swimmingly all the way up until 2020, as you guys remember. And then boom, inflation was 7%, 6.5%, then 3.4% as of last year. So if this trends in the right direction, if we can see 2.3 or 2.5% by the end of this year, then we actually might that's already a really good signal, but we could see some rate cuts even sooner, as long as it's starting to trend in that direction, if that makes sense. Now, in terms of the breakdown of the inflation report from December of 2023, these are all the items that are up from month over month. And we can actually see that the biggest contributors to inflation in December 2023 was juices and drinks, beef steaks, baby food and formula, sugar, frozen vegetables. This is all for the food at home category. For all other items, it's mostly motor vehicle insurance as well as admission to sporting events. I know Super Bowl tickets are really crazy expensive this coming year, especially for the Las Vegas tickets coming up. Vet services, sewing machines, motor vehicle repair. So a lot has to do with cars and recreational type of activities. Now, in terms of what the Fed moves actually mean for the interest rates broadly for all different types of categories. Let's actually look at this article by the New York Times, which sums it up really well. For credit cards, the average rate on credit cards with assessed interest was 22.75% at the end of 2023. That's actually up from 20.4% in 2022 and 16.17% at the end of March 2022, when the Fed began its series of rate increases. So you can see that with all the interest rate increases that they've made, that the interest rates on credit cards have gone up about 6% here. And so that means if you have a lot of credit card interest debt, you might want to pay that off as quickly as possible, because it's likely that that interest rate is going to remain elevated for at least some portion of this year, maybe up until the May meeting. In terms of car loans, very similar. Auto loan rates remain elevated. And in terms of mortgage rates, which are actually quite interesting, they were volatile in 2023, with an average 30-year fixed loan climbing as high as 7.79% in late October, but now it's about a point lower. So if we actually take a look at mortgage rates right here, a loan amount of $500,000 in California with a decent credit score will get you a 6.888, I love those eights, percent interest rate in California. But if you actually increase the loan amount to $1 million, you can actually get a rate for 6.51%. And even with some special financing or some fancy financing, you might be able to get a little bit lower. Now, in terms of housing in particular, U.S. home sales for the last year actually hit a 28-year low, which is pretty depressing, I would say, because these days, there's not a lot of homes for sale, number one. Interest rates are too high, number two, and so no one can really afford the payments, and no one really wants to sell their house because they're all locked into a lower mortgage rate from, say, the 2020s or the 2019s or the 2018s. The National Association of Realtors actually put out this report, which is the summary of December 2023 existing home sales, and you can see that the number of home sales last year was definitely lower than in 2020, and it's actually hit a 30-year low of all time. In terms of the median price of existing home sales, they're still going up. And even though $382,000 is still lower than the high of last year, $413,800, they're still quite up a bit from 2020, which is also contributing to this problem of housing. Now, one of the problems that I see with housing, at least right now, is because these interest rates are so elevated, nobody wants to buy. And what I actually think is happening is that there's so much latent demand or pent-up demand that when we actually start to see interest rate cuts, we could see a bidding war for many of the houses that are actually out there. And we actually might see prices increase disproportionately for actually how much the interest rates actually get cut. That's just something to consider in case you are thinking about buying a house. But look, for now, let's go over my 4 practical tips to prepare for 2024. I have a nice little stock chart in the background here and the intelligent investor picture. But number 1, rates will stay high and might not get cut until May. I think we've already talked about this quite exhaustingly in this video. But what we should be doing is keeping an eye on economic data, including the jobs report and how GDP is trending, as well as inflation data, because if all these things are trending in the right direction, the stock market should actually remain quite steady and hot. And plus, it's also an election year, because as long as all these metrics are looking good, then there's really nothing to stop the buying behavior that we have been seeing in the market as of recent. So actually, let's look at the S&P 500 year to date. I think it's actually up quite a bit. It's up 2.17% already just in the first month. And as you guys might know, some of the stocks out there, like Nvidia, they've just been absolutely ripping. So if we actually look at the Nvidia stock for year to date, it's already up 27%. Like, this is pretty crazy. Obviously, that's some AI hype as well, but what's stopping them? I don't really see any huge catalyst stopping them anytime soon. Now, in terms of the election year thing, there is something called the presidential election cycle theory, which is basically a Charles Schwab researcher in 2016 by the name of Lee Bohl actually noticed that in general, the third year of the presidency overlapped with the strongest average market gains. So that was actually last year. And in the year during the election, that would be the fourth year right here, we actually see that the average gain is usually 6.7% in the S&P 500 since 1933. So if you believe in this presidential election cycle theory, then it might be a good time to kind of start investing more into stocks if you believe that theory. All right, tip number 2 is I would probably just prefer to think long term. Try to invest for 10, 20, or even 30 years, because if you're worried a lot about how the stock market is swinging day to day or swinging even week to week, it might actually drive you crazy. And some of the best investors, they're just passive investors that just kind of buy and hold for the long term. And in general, what we recommend on this channel is just to invest in a low-cost S&P 500 index fund or a low-cost total market index fund. Number 3, if you want to buy a home, consider that your interest rate may stay elevated for the next 2 to 4 years. I mean, even if interest rates get cut a little bit this year, they're likely still going to be above 4 to 5% of a mortgage rate that you're going to get. So if you are going to buy a home and you're thinking about just refinancing in a few years, just know that that's not guaranteed. And lastly, number 4, we want to pay down debt, keep our emergency funds stable, and don't panic. Basically, stick to the fundamentals of good personal finance, and you can learn a lot about good personal finance on this channel from all my other videos. Apologies, I just had some weird thing with the headphones there. But that was basically the video. I don't have really much to add for today. Today's meeting was a little bit boring until Jerome Powell just kind of dropped that bombshell on us and said that there's no cut going to be in March, or he doesn't expect to cut in March. Could that still change in the next 2 months? Definitely. It could still change, and we could still see a March cut. I will try to keep you guys updated on this channel, and you can also feel free to join me in my new Discord. I have about 800 members in there, and I'm always in there messaging people. I'll leave a link down below if you're interested in that. Let me know your thoughts in the comment section down below. Make sure to subscribe to this channel, and I'll see you guys either in the next Federal Reserve meeting in this type of video, or if there's any crazy financial news that ever happens, or if you just want to see me cover more topics in this format, let me know down below. All right.